There we are. So that is being recorded. That is live on YouTube. So Miss Donna, you are the host. You are fully in control. She's the boss. From what I keep hearing, she's in charge all the time. So you do what you need to do. Make sure that you're checking YouTube if you would, please. For anybody who has any questions, I would super appreciate that. But oh, I better mute that. There we go.
No
It's muted.
problem.
So for everybody else, welcome to tonight's call. Obviously, it's the beginners class. So for those of you guys who don't know me, I am just another person. I happen to be a coach inside of Super EZ. So in this group, he has some indicators, obviously some predictive. So they're counter trend trading indicators, but we also do classes, and then we have another side group as well that goes above and beyond and does signals, and then more classes, and just anything we can do to help other people get to a new place in terms of trading. So that's kind of the purpose and what we're doing in this group. So for those of you guys who don't know, please do not trade what you cannot afford to lose. Where I am definitely the advocate for the burn your boats kind of person, you have to understand that the market is very, very volatile right now, and things are changing dynamically, and things are changing daily, and they're going to continue to do so with the COVID and the state of affairs and the election and all the other things that we dare not speak about because it would definitely not be politically correct to do so. So just keep that in mind. I am not your financial advisor. I'm not your tax advisor, your accountant, your CPA, legal advisor in any way. So everything we discuss on this call is for educational purposes only and nothing more. I went ahead and added this spreadsheet to the class, obviously, because this seems to be where I thrive. So, as you guys know, I've been with Super Easy for a couple of years now. But prior to that, I was with another company and we had a great time. I mean, great setup in terms of education, but overall, not a lot of like one on one help, not a lot of, no really access to people. So, they had tons of classes, but you didn't really have access to like actually getting your questions answered. So, needless to say, on this long journey of trading and investing in just different businesses that I've tried, many of which I've failed at time and time again, but we ended up here and ended up something that I love and I'm good at. And if I can be a difference and help people, then great. That's kind of what we're here for. So, what I seem to be the best at is just compounding really small accounts. And in doing that, I really got good at the little things. And I do mean the little things. So, in my experience, most strategies, most indicators all have a value to an extent, but their value is only as good as your ability to execute rules and follow them consistently. So, how are you going to compound your small account or your large account for that reason? Or, sorry, for that matter? It's pretty simple. You need to have a trading plan. You need to have rules because otherwise, like somebody in one of the chats today mentioned, you're just gambling. So, please keep that in mind that you need to have some written rules. I don't care if they're typed out. I don't care if you have, my not so girly handwriting chicken scratch on your desk. I don't care how it's written out, but you should have some amount of rules for what conditions need to be met, what confluence do you need before you take a trade, before you exit a trade, what your pip targets are, like if you're using structure or if you're going for a certain amount of pips, how you're going to trail it, stop losses, managers, and then all that other stuff. So we have just this electronic world of amazement where we have access to something that most of the world has never had access to up until these recent years in terms of technology and the boom, because you would either have had to have more than $250,000 of cash to come to the table to even play at these kinds of things, or you would have to have the know-how, the people, and live near Wall Street. That's no longer the case. So you have everything you need to make a difference in your world right here on your little iPhone while you sit over at the parks, while you sit on the beach, while you travel to Bora Bora, or whatever it is that you're interested in. So you have access to that, but only if you're able to apply rules and apply what you need to apply. So please treat this like a business. Please treat this like something that you do want to get good at, not just gambling. Your trading plan should include, oops, sorry, your trading plan should be exclusive to one account, one strategy, or a specific set of pairs, a specific, or a few pairs only. It shouldn't be you have one account and you take some scalp trades with one system, you take some swing trades with another system, you do all these things all willy nilly. Because then when you go back to try and to check this stuff and to drag and drop entries and you're trying to see what you're doing right, you can never duplicate it. If you're trying to see what you're doing wrong, you'll never get to the bottom of it because you'll never figure out what you did wrong or how you did it wrong. And even let's say you did win, you did have a great trade today and you had $10,000 win, you won't be able to duplicate that $10,000. So that $10,000 one time isn't necessarily life changing. It's enough to maybe pay off your car loan or something, but that's it. That's where it begins and where it ends. It's if you withdrew it, because most people don't. They leave it and then they blow it. So having said that, just please make sure you are not gambling with that. Have a schedule, including how many entries you can take per day or per week, or how many hours you're going to trade. The problem and the blessing with having this at your fingertips all the time is that it's at your fingertips all the time. Therefore, you're not giving any love-ins to your husband. You're not cooking dinner. You're not, going to do your workout. You're just constantly checking your phone. You haven't read your kids a story in a week. You're just so addicted to it that now you're gambling again because you're trading, you're looking, you're trading, you're looking. Somebody mentioned something in a group. Oh my gosh, GBP USD is doing this. Everyone goes and looks. Holy cow, gold dropped today. Everyone stops what they're doing and goes looks. Like, you need to have some amount of a schedule that says, hey, this is when I trade. And if I get an alert during these other hours, I have the time to do so. But if I don't, I don't. So be it. So you have to have some discipline in that. Increase your lot size based off of account balance each day, trade, or week. You guys have all of my spreadsheets, which are awesome. And then some people, some spreadsheets in which other people have created for me based off of my rules, on behalf of some of the strategies that we have. So you guys have access to all of those spreadsheets. Please use them. Please study them. Get to know what it feels like. You don't have to be so deathly worried about a loss. Once you actually learn what you're doing, you can be massively profitable with 60% accuracy. You can be life-changingly wealthy with 60% accuracy. But instead, people overprotect their trades, including myself. And then you end up with 90 some odd percent accuracy, but not a lot of gains. So that's not your goal. Last but not least, 5% withdrawal every weekly or biweekly or whatever it is until you hit your next level in life. And as you guys know, I teach on that. So that's stuff like, if you have $18,000 in debt and you need to fix up your car, when you hit to this number or half of that number, withdraw, leave 500 or $1,000 in there, and then build it again, pay off all those debts, and then you're leveling up slowly. So if you need $20,000 to put your down payment on your house and you get to that level, please, please, please withdraw. You don't need to hit the elusive 6 figures or 7 figures just to feel special, important. What you need to do is level up in life. So don't forget whatever that level is for you specifically. So are there any questions, comments on any of that stuff before I move on? Let's see, and I'll pull up the chat just to make sure I have it.
I have one.
Absolutely. Come on up.
Hi, Jenny.
Hey.
Well, so when one of the questions is when it comes to like the lot sizes and entries. So like right now, I'm trying to grow a small account, and I'm using one of the brokers with a small leverage. However, even when I do win, and I mean, I'm in the 60% range, I'm in the 60% range on win loss. However, even the wins, they're just like not there. They're not even at the 20% of that. So I'm trying to figure out in a day, even if I go down to a 15-minute chart, it's like even if I'm winning, that it doesn't add up to that 20% or 10%. I mean, I maybe get like 1-2%. Trying to trade that lot size, trying to keep it in a trying not to over leverage, even though I'm using like Oana. So I guess that's how you pronounce it, but it's just a smaller leverage broker. So I'm trying to figure out like what am I doing wrong with that? Am I not stacking, or am I not taking enough trades where I see less is more? So how do I grow that account more than what I think that it should be?
Okay, so first off, what's your name?
My name is Isaiah.
Isaiah. Okay. It says EB1. I'll try to remember that because your name is different on here. So yeah, I've got 3 things for you, and probably a lot more, but just for the sake of time, let's start with those 3. So first things first is, what is small leverage on your, what broker are you using?
So I'm using a Honda, so that's a 50 to 1.
Okay, so I'm gonna be a little direct, but I mean this with love. Ready? I honestly, legit think you will make more money going to drive for Uber with a nice smile than you will with 51. Like, I'm not kidding, because it's seriously. Because 50 to 1 leverage, now granted, that's a very reputable broker. If you're bringing 10,000, 20 grand to the table, it's a great broker. If you have access to you have a lot more capital, then they're reputable. They're definitely been around a long time. But at 50 to 1 leverage, you only have, a couple $100 or maybe even $1,000. You're not going to grow. You don't even have the potential to grow. Like, stacking isn't even a question at this point because it doesn't exist for you. 50 to 1 leverage is nothing. So to say very directly, you're better off. I mean, use your smile and go do DoorDash, because you will make, your several grand a month doing that versus trying to grow a $200 account with Awanda quickly. Because you can grow a $200 account with Awanda, but you're just not going to do it quickly. It's not that it's impossible, but you're looking at, I think the potential on a 50 to 1 account is less than 5%. And that's your max, as in like you're a half an inch from a margin call. So if you're half an inch wrong, you are SOL kind of level. So first and foremost, there are 3 links, and Miss Donna can post that whole big paragraph that I have. I would definitely recommend Hugo's Way. It's my favorite broker. They're only 500 to 1, but I love them in general. They're quick, they're effortless, they're easy. They always fix a problem for me. They're reputable, and 500 to 1 isn't bad. Their spreads are good. They're not like the tightest out of every company, but they're consistent. And then, of course, 500 to 1, fast withdrawal, no drama, no headaches, and they fix their problems. So that makes that broker good for me. And then, of course, for swing trading and you're looking for your high risk, high reward, no swap fee kind of trades, then I would recommend AFX. They have 2,000 to 1 leverage, which means you can trade a 2 standard lots on a $100 account. That's just to give you an idea, without blowing it. Now, granted, you only have about 20 to 30 pip drawdown depending on the value of the pair you're trading, but just to give you an idea, you can get away with 2 standard lots on a $100 account with 2,000 to 1 leverage. Not that you should, I'm just saying you could. Okay. So not that you should, just saying that you could. And then of course, CoinX has slightly lower spreads than Hugo's Way, 500 to 1 leverage as well. Their website isn't as user friendly, and their withdrawal isn't as fast and effortless. So Miss Donna can post all 3 of those links. I would definitely recommend one of those brokers, because anything else, to be very direct, it's not that it's impossible. It's just not that it's not going to happen this month, or maybe even the next 6 months, because I mean, the law of averages and numbers, you would have to be dead on and fully maxed out to even hit certain percentages in a month's time, better yet a year's time, with 50 to 1 leverage. So that's number 1. Number 2, you said something about not being able to grow 20%. Most of that's going to go back to your available margin. You only have so much margin in your account, so much room to risk. And remember that you're trading leveraged money, so you already have access to a great deal more than you're actually bringing to the table, and that's the value of leveraged money. But the whole key is, if your risk to reward stinks, or your management in this case, and I'm finding that a lot of the clients that I work with have good risk to reward in theory, but poor practice, meaning poor management. So you might initially place this trade with the ideal 1-to-1 or 1-to-2 risk to reward leverage kind of rules. But then if you mismanage it and or overprotect it, in other words, lovingly, I mean, you're thinking you're doing the right thing, you're constantly closing out with a full loss. Let's just say your full loss is 30 pips and you protected 10. Okay. And I'm going to protect this before it reverses on me. So your losses are now exponentially, or in this case, 3 times bigger than your gains. So that's probably your next place to really buckle down on and look at very, very, very clearly. So, and then you said something about the percentage of accuracy you had and then results you were bringing or you were getting. That would come back to that whole 50 trades. So you need to go out and get 50 trades doing the same thing, not various things, the very same thing, the same way, to the best of our human, we're not computer programs, but our human ability, do the same thing for 50 trades. Let's find out what your accuracy is. And once we have that number based off of whatever strategy, whatever system you're using, you can then take that data and say, okay, now that I have this information, if I tighten up this management, or if I do this, if I do more swings or more scalps, you'll be able to find the exact tweaks you need that is specific for you and not everybody else, but for you specifically. And we can tweak your trading from there. And oftentimes it's a matter of like 1 to 3 really small tweaks. They're not major. And when somebody like me says them, it's this really this really silly question or statement that seems insignificant and it seems irrelevant. It seems like, oh my gosh, I've heard that 1,000 times before. I'm never going to get this. And all those inner voices take over. But it's usually just a handful of really tiny things that's going to get you from point A to point B. But you need the data to know what we would need to work with. So.
Yeah, so I guess I'll probably have to get new licensing. So I use both on Awanda. I just didn't know, but
Well, hey, if you got licensing for a Wanda with the simplicity system, here's what I would do. So I use a VPS. I'm very pro VPS. It simplifies my entire trading career. It keeps my computers reasonably clean. But also you can have your VPS running with a Wanda on it, keeping your simplicity broker up and getting your alerts if you're using alerts, and or if you get the dashboard that's coming out here shortly, you can keep that running off of a Wanda. And particularly if you're using slightly higher time frames, you can still get all your alerts from, let's say, a Wanda's platform or a Wanda's broker account. Okay. And then you can be trading live off of a Hugo's Way account. You can be trading live off of an AFX account or whatever other broker you see fits. So you don't think that you have to necessarily get a new one. Remember, like right now, you're only seeing this portion of my screen, but right now, the portion you're seeing is about 25% of this huge computer screen I have in my office. So you can have one window up that has your simplicity on it. And in theory, you can have no monies in that account, or you can have $10 in that account, or you can have $100,000 in this account, or it can be a demo. And this could be where you analyze. And then on this other screen over here to the right, for example, you can take that and say, okay, well, this is the broker I'm logged in on. I have my structure on this chart or what have you. And this is what I'm going to take live trades on. This is where I keep my money. So you don't necessarily have to purchase another license. But obviously, I mean, as you get further along or you get to a position where you're able to, you can definitely do that. That's just my 2 cents.
It's good 2 cents. It's about a couple of dollars or $100 or
I just
$1,000.
posted the
I
links
appreciate
in the
it.
group.
Donna, did you say something? Sorry, she's
Yeah, I just said I posted the links in the group.
Oh, thank you. I super appreciate it. All right, awesome. Well, that's what I would do in terms of your leverage. And again, I've said it a couple of times, and people laugh when I say it, but 50-to-1 leverage is not enough. Not for most of us, especially beginners with no real success, who's never withdrawn. Like most of us, like I honestly, I probably would have quit trading if I had started with a Wanda. If that was the first broker I ever played with, and or I got pretty lucky the first couple of times, like, and that was sheer luck. I clearly didn't even know what a pip was. And then of course I struggled for like 6 months and went through the ups and downs that most people do. But in general, if I was only playing with only just a Wanda, the odds are, with all that stacked against me, I would have walked away from trading. I would have been like, this isn't for me. I can find better success elsewhere.
Well, I do a couple other things in life, and trading is something. I swear. Well, that makes me feel better because I haven't walked away. So, and I have seen some of the games, and the 60%. It's actually since I've had this platform, and I've been trying to get consistent with like the 415 strategy. So at least the measurements that I've seen out of 74 trades so far, it's like 60%, but all of them haven't been 415. I would say about 40 of them have been 415 so far, and I mean, it's pretty good. But I mean, that's what I'm trying. So yeah, I just signed up with Hugo's Way today, and I want to switch.
All right, awesome. That's awesome. Well, I hope that you enjoy Hugo's Way. Definitely a great broker. If you did not use my link, then message them my email address and they'll make sure you're linked under me. Because at this point, we have a whole team of Super EZ people. And I think I have only 230 people or so on there. It's not even a lot of people, but they've already withdrawn a lot of $1 million. Like, so my clients particularly have already withdrawn a lot of $1 million. And that's kind of cool and really special to kind of be a part of. So very, very special, I think. So. But all right, does anybody else, I know there was a couple people in the chat who said they had some questions, all other good stuff. Does anybody else have any specific questions or things that I can help them with, pairs that they want to go over really fast, using simplicity, before we go on to something else? Anybody at all? All these shy people. So real quick, I'm going to interject why somebody decides if they want. I know, right? I'm going to interject real quick while everyone decides if they want to talk. A couple of things. Most of the people who are traders' inboxes are absolutely full. I'm talking ungodly, unreasonably, irrationally full. So when somebody comes up and says, hey, I'm not a perfect person, I'm willing to come and teach you what I've got. Like, I don't know all the answers, but if I know it, I'm here and I'll help you. Within reason, I'm here. Don't miss out. Don't sleep on this opportunity because it won't always be around, number one. Number two, a lot of us did not have that. And I can tell you that if you can cut your learning curve in half even if you can cut it in half, just imagine what your life can be. So there is no question too dumb. There is no question too small. There is no, what does this mean? Well, what happens when this happens? There's literally nothing you can ask that is going to be out of the ordinary. Super open, super loving group, just a great group of people. And I'm going to say that to say this. Some of you guys are doing super well, especially in the advanced membership group. And that obviously feels amazing. But then some of you guys who are struggling and are not willing to put yourself out there and unwilling to be vulnerable and say, hey, Jenny, here's what's going on. Let me drag and drop my entries real quick with you. Let me kind of be transparent. Yes, it's painful. It's hard to be on the spot. It's not easy because you have to be honest with yourself. But a lot of times when you do that, you're already going to have this huge leap, this huge level of growth. So I implore you for the bajillionth, quadrillionth, non-English speaking words time to be willing to put yourself out there, drag and drop your entries. Let's analyze what you're doing. Let's talk about, well, what were you thinking when you took this trade? Why did you do this? Or what did you see here?
I was just talking.
That's going to change you. It's going to change your trading career so much. It will blow your mind. So that's what I've got. But I've got one person in the chat who said EuroCAD, and there was a gentleman speaking up. So who was that? Who was the guy speaking up?
That was the same guy who asked that question, the EuroCAD. It was Carl.
Okay, then I will go over EuroCAD. Actually, before I click on EuroCAD, guys, I am very, very heavily watching GBP USD. I was catching some of these moves in this one, but this is mostly scalping I'm doing. So mind you, I'm not holding long term, but I have been watching your GBP USD. I'll zoom it out, make it super ugly to kind of show you, you've got this enormous push to the upside. And again, we don't anticipate the market. That is never our job. We're in what Pat calls the hot zone, right? We are definitely kind of forming that. You can call it a triple top. You can call it a possible head and shoulders. Everyone measures that differently. Either way, we are having some rejection. So we stopped making higher highs. So it doesn't mean that this might only be a very small pullback and then obviously continue the upside. That very well could happen. But I am looking at this for a decent drop. You have to think about the size of the move we're seeing. Actually, I didn't measure it. Silly me. This huge move. I mean, to get even a 28, what is that? I'll drop it just for conversation purposes. And I'm going to do it from the total bottom before I go to the top. So even if we just get to the 23, okay, that's not a bad move. Then we touched here before, okay, but I really want to see it kind of come down to the 38, which would really be in line with this over here. So to come retest this previous high. That doesn't mean it will happen. Again, we have a lot going on economically to push, all this stuff happening. There's a couple people. Ricky said a few weeks ago, hey, Ricky, he was waiting for all the GBP pairs to drop. They have yet to do so. But I am definitely super interested in this trade, baby stepping it all the way down. And if I am in it, this is one that I will choose to hold, and then I will continue to re-enter on each pullback until I get in and around this either this high. Remember, think of a zone, not a line. Think of a big box. Okay, or anywhere around the 38.2 for those of you who use Fibonacci. So just kind of keep an eye on this. It's definitely a good trade. Again, there are no guarantees in Forex or really anything in life ever, no matter what we do, as much as we want to. And keep an eye. So he said, watch it. It's a bearish flag. I definitely see the flag as well. I also see this engulfing candle waiting for it to retest yet again because we know it has to. Wish it would just drop for me, but no. So beautiful kind of big candle, and that's what we want. We finally did break below the 50. And again, that's what I wanted to see. We have an actual body below the 50, and we haven't had that in a hot minute. So I'm waiting on this to sell for those of you guys who don't know. Now, in
Hello,
terms
Jenny.
Hey, how are you?
Good. How are you?
I'm
Quick
blessed.
question.
Yes.
Okay. Since we are talking about all this trending stuff, my confusion sometimes is when you look at the daily and the weekly, and it's an uptrend, right? But then when you fall to maybe the 4-hour time frame and the 1-hour time frame, and you see it dropping, do you still consider it an uptrend, or where do you? Am I making myself clear?
Yep. Yes, ma'am. So I was just letting you finish.
Okay.
So here's the thing. The problem is especially when you use like a reversal indicator like this is, we don't want everything to tell us to buy. Because if every time frame is telling us to buy, what the market is telling us is it's dropping so hard that nothing is stopping it. So we don't need every time frame to agree with us. Is it nice sometimes to be going in the same direction? Absolutely. But if you're trying to find 1 hour trades, which means you're only going for that 20 or 30-ish pips, or you're going for that 30 to 70-ish pips if it's a GBP pair, you don't need to necessarily care what, I mean, I definitely don't care what the weekly time frame is doing unless it's up against massive structure or a massive trend line. Like, I don't really care at all what the weekly is doing. Now the daily, I could see some value in knowing that, okay, the daily time frame is moving up, and it will tell me, for like, for example, in this case, there's no denying that this is an uptrend, but I'm not trying to take this as a trend trade. I'm trying to take this as a counter trend trade. So that's a factor too. And in this case, the daily time frame is telling me there's a lot of wicks. Wicks mean rejection. We've got a couple of dojis. We've got some hammers. We've got all this action going on here that says, oh my goodness, price is stopping making higher highs. It's totally freaking out. We definitely have a, not a guarantee, but
Go
a good
down.
possibility of a fall. So if we go to the 4 hour, notice how we don't even have the sell signal yet on simplicity. We don't, it's not even there yet.
Mhm.
It's not there. Now, if I go to the
Yeah.
1 hour, so that means we're still buying according to simplicity, right? The 1
Mhm.
hour, I think, has it. Let's find out and
Yeah.
verify. Oh, I'm sorry. I'll close that. That's my trading view, but just in case somebody wanted to go over structure tonight, so I kept that open. Okay, so 1 hour is telling us to sell though. So you have to take it with a grain of salt and say, well, wait a minute, what time frame am I going off of? And if you're asking me, I would tell you pick your time frame you want to trade from, and then you can care about the next higher time frame or the next lower time frame for faster
Okay.
entries. But don't care about every time frame. That's a recipe for a headache.
All right. Thank you.
You are welcome. You are welcome. All right, awesome. So somebody in the group in the chat had asked about EuroCAD. So let's take a look at EuroCAD on the simplicity on the 15-minute time frame. Since we're on the 1 hour, we're going to take a look. That's a beautiful drop. Gorgeous drop. Huge impulse, correction, impulse. What are you looking for this to do, Carl? What is it you're seeing? Can you unmute yourself?
To go long.
You want to buy it
Yeah.
based off of why?
Well, the 15-minute and the 5-minute I saw down there bouncing off the bottom of the buy zone. And then there was a 1 hour engulfing candle recently in the last few hours. And it looked like a buy.
Are you trying to scalp it basically?
Maybe up to the bottom of the red zone.
Okay. So up to the bottom of the buy zone. So clearly on the 4 hour, we're selling. We have an impulse in the
Maybe.
direction.
I'm sorry. I think I told you the wrong one. I think it's Euro odd. I'm sorry.
Okay, let's take a look at that.
That's not the chart.
Let's find it. There it is. I don't trade this pair because this pair has the highest swap fees. So I just originally never really played with it. I just always left it.
Not it either.
Huh?
Wait a minute.
I'm sorry, I didn't hear you.
Hold on 1 second. Oh, God, that's crazy. I'm talking about the odd CAD. I got my names all mixed up.
So odd CAD?
Yes.
Okay. Okay. Let's see. Let's try that one now. That makes more sense. So 4 hour time frame, engulfing, nice, clear cut, dropped hard. I mean, made a lower low, and you're wanting to buy it.
Is that the 5-minute?
No, we're going to go to the 5 minute, but I just want you to see the bigger picture. So you kind of have this triple, top pump. Definitely would, I think this would qualify as a head and shoulders for sure because where the shoulder sits, right?
Oh, okay.
So this would qualify, and it doesn't mean nothing is guaranteed. So remember, if I drew a line here versus a box, I mean, boxes would be better, but we all know boxes don't draw well on MT4. So
Right.
they draw better on trading view. So we have this level of kind of structure here in this kind of pinkish line. That's a beautiful head and shoulders pattern. And if we break this for the sell, we'd be looking to take it down there. So we'd be looking to sell this if we break. So if we break that, you're looking for a reasonably, I mean, anywhere from 40 to 50 up to 100 pips easy. I mean,
Mm.
that would be a very safe trade in terms of the higher time frame. And just so you have an idea of what's happening on the higher time frame. However, comma, we do also have this beautiful kind of doji forming. We definitely have this wick happening in the same area where price has stopped before. So that's good. You're at support, right? So you have something working in your favor at least. Now, if we keep going down to smaller time frames, you definitely are still selling. Okay. We have a small correction, but this is a flag. This is not a reversal. This is a flag. We
Oh,
already another candle kind of coming down. So think drop flag. So drop. This is an awful one, but drop. Okay, flag, drop. Same concept here. So let's take
all
a look.
right.
I don't know if you're in this buy already or not, or you're looking to buy. So the blessing would be as I go down to the smaller time frames, you're in the buyer zone. But remember, this box that's drawn here is essentially just a Fibonacci zone. That's all it is. Okay.
Mm.
It's nothing more, nothing less. And remember, Fibonacci adjusts. So it's yes, they're golden numbers and they're magically special and magically delicious, but they do adjust. So they have to adjust as price keeps moving. So keep that in mind as with the, with the take it with a grain of salt kind of thing.
Right.
The best thing that you have going for you is, let's say you wanted to take this risky kind of buy. So you could say, okay, we've got the breakout to the upside. We pulled back to about 50% of this breakout. The good news is if you took this as a buy because you wanted to, that your stop loss would be reasonably tight. So that's
Yeah.
it's a slow moving pair. I mean, very well, it's not as slow as it used to could have been, but that's 15 pip
Yeah.
potential.
Okay.
Your potential to buy is 30-ish pips to the plus side. So even on this oscillator, you're definitely still not ready to buy. But let's go down to the 15-minute now, which is where you're at. And even on the 15-minute, we still don't have the buy signal. So we have the kind of push to the upside and we're already breaking back down. So there's that. And on the 5-minute, we've got a buy. So again, the plus side is if you take this for a buy, your stop loss is really tight. So,
Right. Well, that's the only reason I looked at it. It was so close to the bottom of the bottom. And it looked like it might turn up. Looking at now, the smiley faces on the 5 minutes turned green. What does that mean?
So basically prices above it, it's a weighted 50. Well, no, it's weighted based off of the settings that you use. So if I go to simplicity, keep in mind I have a slightly different version than you. But so based off of the settings you're using, it's weighted, it's a weighted moving average. It's a fancy one that changes colors that from if price is above it or below it. So
Okay.
price is above it, it's a buy. Prices, it starts to come above it, but comes back down below it. So it's a sell.
Okay.
And that's all.
Doesn't look near as good as your pound dollar did.
No, the pound dollar. Well, the cool thing about the pound dollar, no, again, so let me be fair. The pound dollar isn't going to have as beautiful as a stop loss. So let's talk about pros and cons.
Yeah.
The GBP USD is going to have a treacherous, very painful, potentially or heart attack causing stop loss because it has to. It's a faster moving pair. It's got a much bigger area. So depending on the kind of trader you want to be, this isn't a bad way to be. Because we're, we have the impulse, we have a pullback. Again, you've got a real tight stop, so that's in your favor. But overall, you're still
Down.
down.
Gotcha. Okay. Well, I was curious about how much emphasis to put on that lower buy zone box as something that's like a brick wall or anything, but if it's moving, it's not. I didn't understand that.
Okay, so do you know what the box is?
You said it's a Fibonacci zone.
That's what it is. So if this is 0 or 100 and this is 0 or 100, these are simply the phases in between. That's all they are. That's what the box is. So this is 0. So in this case, if this is the 0 zone, okay, or the 100 zone, this would be the next 70 whatever or 28 whatever. That's all that is. So the way Fibonacci is measured, that's how this works exactly. So it's the same thing. So remember that you're going to have a box as price continues to move, your box is going to continue to move. So there are statistics and probabilities that are in your favor as if we do, so we stopped here. So you have a very high probability of coming to test up this golden. So what my 50 is, right? Well, that's my 250. So it's my next higher time frame 50. That's the, but you have a very high probability of being able to do so in and around this area based off of just the Fibonacci numbers. There are things in your favor that says that's the case, but you have to, take that with a grain of salt. So if we fail to make the lower low, would you consider the buy? Absolutely. If you get a signal on the 15-minute simplicity, could you again say, okay, well, we definitely have a pullback, but I wouldn't call this like an impulse, at least not yet. So it would have to fail to make a lower low and then make a higher high from here to be considered reversal material. So to be
Okay.
reversal, it has to fail to make a lower low. So it pulled back, it needs to drop and then make a higher high to be considered a potential reversal.
Okay.
Does that
All
help?
right. It does help. Thank you.
You are welcome. See, that's dropping. So I hope, and it doesn't mean that it might not, it could, anything is possible, but it could.
I mean, I actually have a very small buy position, but I put the stop loss right under the zone. It was like 15 pips. So it's just a few dollars. I'm practicing. So.
Well, keep practicing. Hey, can I please recommend, in terms of simplicity, please don't let's not take the 5 minutes as a signal so much or too much. Like at least if you're going to take the simplicity as signals, go up to the 15-minute bear. Like that's the lowest you should go.
Okay.
Just as a good way to be, and add some other checklists. So like whatever your eyes see best. How long have you been trading?
I've been trading a couple of years, but like some weeks I'll make a lot of money and then I give it all back. It's been a whipsaw, and I'm trying to delete the bad parts, and because sometimes I'll see things and it works perfectly, and other times I'll see things and it's backwards. But that's where I'm at.
Okay, so can I ask you, have you ever stuck with one thing for 50 whole trades?
No.
Well, that's probably step number one. Step number two, what level, what number do you usually blow your account at? So do you get to $3,000 and blow it? Do you get to 10 grand and blow it? Do you, get a compound a $200 account to 1 grand and then blow it?
No, I've never actually blown one, but I mean, I usually work with about $2,000 because I don't have enough confidence yet to put a lot of money in it.
Okay, so at what level? So if you're working with 2 grand, do you just kind of lower it and reload? Or like when you compound that 2 grand, what level do you get to? Do you get it up to 6 grand? Where do you get it?
No, I've probably only gotten it to about 3, and I've had to, it'll get down to about 12 or 1,400, and I'll put a little more in.
Okay, so so if your first step is going to be to follow one thing for 50 trades, your next step is going to say, okay, when you get to 3 grand next time, take out your $1,000 and actively start withdrawing, or maybe start withdrawing 5% every 2 weeks. So even if you didn't earn 5% in terms of interest, about 5% anyways, just to start healing. Because the problem is, if you've been playing with this for 3 years, you've now become, and I mean this lovingly, but you become a habitual loser, right? So you have literally, like, your psyche has accepted the fact that this has accepted the entire process. So even the simple act of withdrawing 5% every couple of weeks and physically go spend that money. So go spend it on a cup of expensive coffee like I would do, go do it, buy a stranger lunch, whatever it takes, but go actively spend it something that you can physically see. Because most of this, if you're asking me, is psychological. Like most of it's not even all this colors and the numbers and the charts. It's all of your emotions and your feelings and the amount of energy we put into this. And if you're so used to that already, it might be a good 2 places to start is stick with one thing and don't stop bouncing around every system that comes on your desk. And then secondly, start withdrawing 5%, every 2 weeks or so. And third, next time you compound to the level you typically blow it, withdraw and before you blow and then, let it grow again. So that might be some actionable items for you. Maybe.
All right.
All right. Awesome.
Thank you.
Thank you. I super appreciate you. All right, next question.
Hello, Jenny.
Hey, Tony, how are you?
Oh, I'm pretty good, thank you. I've just got a question you might be able to help me with. Got a bit of frustration at the moment, well, because I'm in Australia, and I don't get to trade the Asian session because I work. And when I come home in the afternoon and I set myself up for the London session, and London hasn't been really doing a great deal. Caught a move on Monday, which is your Sunday. But I get a lot of frustration because through the London session, it doesn't seem to be doing a great deal. I can sit there and look at it, and then nothing sets up. I'll go away to the computer, come back in an hour time, and have another look at it, and I don't really get anything. And then when I go to bed and I get up in the morning and I have a look at the form and everything else, everybody's, can have a wow of a time through the American session. Now I'm trying to work out how I can reschedule myself or my trading plan or something to catch some of these moves in the American session without getting up at ridiculous times of the morning before I come to work. So just looking for a bit of advice on what avenue I could go down to try and help me catch some of these moves in the American session.
Okay, so Tony, let's see. I'm not going to pretend to be a time zone converter because you're lucky I know what time it is here. So
Yep.
let me be super honest for a second. Second off, I don't recommend people try to stay up for every session because even if you got really good and you managed to make a boatload of money this week and you were sleep deprived, by next week you gave it all back because you're half delusional, you're a zombie, you're malnourished and underslept. Okay. So,
Yep.
I mean, creating that wise schedule is good. I can't, I don't know. So wait a minute. What time, when New York opens, what time is it there?
When New York opens, it's 10 p.m. and I'm in the future, so I'm ahead of you. So at this present time, it's nearly 10 to 11 a.m. in the morning on a Wednesday morning.
So New York is 10 a.m. So what time
Yep.
is the London session there?
London session is 5 p.m. in the afternoon.
Okay. And Asian session is when you're at work then, yeah?
Yep. Now I work from 7 o'clock in the morning until 4 o'clock in the afternoon. So Asian session's really out. I can look at my phone every now and again in breaks and stuff like that, but I generally don't like to trade off my phone. Much I'd rather see the screen properly on the computer.
Okay. So a couple of things. First of all, Asian session is the worst chess session to trade. So you're doing yourself a favor by skipping it, right? It has the least amount of money flowing through it in general. Not to say they don't have high volume days occasionally, but dollar for dollar, day for day, they have the least amount of money time for time. So
Yep.
let's skip Asian. Let's not worry about it. Now, in terms of New York, is 10 a.m. your time or 10 p.m. your time?
10 p.m.
p.m. So that's your bedtime. And that's when New York opens. Well, you kind of have a
Yep.
great time then. So do you have a family?
Yes, all my family's grown up. It's just me and my wife at home at the moment.
Okay. I had to ask just so I can, have some honor there. But like,
Yep.
I can't say like what your dinner time and everything would be like. But if you scheduled a time that said, hey, you're either going to remember, you don't want to trade exactly at the open unless you're scalping. Oftentimes you can scalp for a pretty penny at open, but you don't want to trade exactly at open. That's never going to be in your best interest unless you're just looking for a couple pips. So by the time you got home, you spent some time with your wife or you had supper early, for example, I would set my schedule up to be somewhere around 4:45. So you would see kind of the London open bell. A lot of volume is transferred right before London. So I don't know what time you're home, but if you could schedule, let's say a 1 hour time period at that time, then of course, your household responsibilities or family or whatever. And then if you came back and New York starts at 10 p.m., there's the highest volume time in the entire day is literally that. So I guess that I don't quote me, but I'm pretty sure it's like 8 p.m. your time to about 11 p.m. your time. So that 3 hours has more money than the other 21 hours of the day. So you have an ideal amount of time and schedule. Like honestly, I really feel like I would be a billionaire right now if I just lived in London for a handful of years. I'm not kidding, because London has the most volume.
Yeah.
But
Okay. Yeah, well, of late, I haven't seen a great deal of volume happening in the London session. It can sit there and just It's just like watching paint dry.
Well, wait,
And
we have
then,
that too. New York definitely has that too. Ask anybody who's been on my scalping classes in the morning. Some days we're
yeah,
like, oh, it's not doing nothing. And we don't get to control that, particularly with
no, no,
the, the state of affairs worldwide. The
no.
whole world's freaking out. That's no secret. So,
Oh, yeah,
um,
sure.
having said that, your best bet is to get good at a trade manager. Okay.
Yep.
B, you don't want to be holding a trade through what could potentially, so you got to think. So if you're taking that 5 p.m. trade at London, you don't mind letting that stick around because you can check it and or protect it before bed. And that's one session. But oftentimes something that's kind of common knowledge, not that it doesn't happen every time, but you can definitely get this huge buy in London that reverses and pulls back in New York. So you definitely don't want to necessarily be finding swing trades at the bedtime one. So your 8 to 10, I would schedule that period for some form of scalping, okay, or
Yep.
intraday trading, as in you have 3 hours to hit your target. Otherwise, you're going to protect it and go to bed. And then if you can fit that hour into your schedule after work, I would have that. So if you wanted to look at anything that's even minutely above the kind of intraday thing, so a potential almost maybe baby kind of swing trade, then you would enter that at London. So somewhere around London, or like after London opened, that's when you would enter your potential swing trade. So at least you had time to figure out the direction and or protect it prior to you going to bed.
Yeah,
So
yeah. So if I take a trade on the, say, when the Frankfurt opens, which is an hour before London, sometimes that gives you a nice move. And if I've got profit on that or whatever, I won't leave that trade open when the London opens. I'll close it.
yeah, because it pulls back. It doesn't even mean you're wrong. So, but you could
Hmm.
definitely be right. So like you would be right on this, for example, this sell that you entered here, but it pulled back, it hit your stop and then dropped. So if you're looking for swing trades, you're going to have to change your, not only your trading style, but your compounding style and what have you. If you're looking for something that you can scalp, that's when you would go down to like the 5 and 15 minute, even 1 minute, if you have the stomach for it, you would go down to those
Yeah,
really
I'm
tiny.
currently using your strategy on the scalp strategy, so I've only just sort of started it in the last
Then use German. Honestly,
last 3 weeks. Sorry,
German 30.
German 30. Okay, yeah.
Have you traded that yet?
No, not as yet. I have looked at it, but I've never pulled the trigger on it.
Okay, so look at the value. It's really close to the value of NAS. Okay, so
Yep.
it's very comparable in terms of how it moves. The ADR is very comparable, but of course, it's going to move a little bit smoother during the times that you're trying to trade. So this is where your money.
Yeah, I don't mind that. That doesn't bother me. Like, I'm only shooting for 30 pip target a day.
30.
That's my target. Yep, 30.
You can get that in minutes, like honest, in minutes. It's very, very doable, especially on one of these indexes. So if you're
Yep.
trying to trade London and the crossover, look at German 30 for sure. I'm not a fan of the S&P 500, but it's not a bad place to be. It's just a little slower and a little wicky. UK 100, try that.
Yep.
These two are going to be moving a little bit more during your time. I don't want to speak too heavily on these other ones because I don't trade them often, but Australian 200 is not bad. It moves a little different. And then I know somebody in the group trades the Hong Kong, but again, the value of this is closer to US 30. So this is it's a heavy one, but it doesn't, you have to do a heavier lot size to feel it because it's different.
Yeah, I looked at that one last night actually, and you've got to have a heavy lot size to get something decent out of it on a move.
Yes, because it's like what is that called? It's not even a mini lot. It's a
Micro lot or something.
Yeah, it's way small. So it's like a cent. So
Mhm.
it's way strange. I don't know enough about it to trade it, but it's definitely those other ones, UK 100, German 30, Australian 200. I can't speak on the Japan or the Hong Kong, but those would be a really good place to start. And of course, NAS, not so much Monday morning, as Donna can attest, but most mornings prior to New York Open, you're going to get 2 or 3 good moves using my strategy in the time that you're trading. So my strategy that 10 p.m. your time. So if you can fit it in like at 8 p.m. your time, the odds of catching 3 moves that have opened and closed before going to bed are very much in your favor. Is it going to happen every day? Absolutely not. It's not. Sorry, can't happen. But
No.
can it happen enough days to where you can compound, let's say $500 to, a big amount in the next few weeks? Absolutely.
Okay. So I've probably been looking at the wrong pair sort of thing. Yeah. Well, I have looked at the NAS. I've looked at a couple of the pound pairs, higher movers like the pound New Zealand, pound yen, pound dollar. But yeah, I haven't sort of concentrated much on the indices at all
Okay.
in that time frame.
Well, now you've got some actionable steps and you've got literal times that you can use. So go to the German 30, NAS,
Yep.
GBP USD is one of my favorites at that time. This morning, there was one of those beautiful drops. I mean, it was 30 pips instantly, no drawdown,
Yeah.
perfect. And that was before New York opened.
Mhm.
So
Yeah.
not a bad way to be.
Okay, well, thanks very much for that.
You are
That
welcome.
gives me something to work on.
Okay, but you have to actually work on it in the next few weeks. Come back to me and tell me you did. Deal?
I certainly will. I'm
Yep.
I'm sick and tired of standing still.
Okay, good. I'm gonna
Yeah.
hold you to it then.
Okay, thank you.
You're welcome.
Hey, Jenny,
Yes, sir.
2 questions. Okay,
Okay.
the first what is the ADR? And the second, what is your definition of a lot of money? Because when you say that, I mean, that's, a pretty big deal. You
Well,
said in a few weeks that's possible, but just trading like the German 30 and those things, with a smaller account.
Well, here's why. So here, I'm going to stop this share. Let me think about how I'm going to do this. Yeah, I'm going to share that. So bear with me. You have to give me a second. So I'm going to stop that share. Compounding NAS. I'm going to delete some stuff from one of these. So bear with me. Testing in class. There we go. Now I'm going to share this screen. So first of all, to answer your first question, what's a lot of money? That's subjective. So if you're somebody who came, from $100,000 and like you've always had X amount of dollars in the bank, me telling you $5,000 is a lot of money is not a lot of money to you. So for somebody who, has never made more than $3,000 a month, and I tell you, hey, you can make $5,000, that's a lot of money. So that's subjective and it's a very personal experience. My lot of money is changing. It's definitely changed exponentially from when I was little. I didn't come from a whole bunch at all. So I had a big family, but my idea of a lot of money is definitely nowhere near what doctors make anymore. My idea of what a lot of money is no longer some 6-figure lawyer job. My idea of a lot of money has changed and will continue to change the more you evolve and the more you see what's possible. So that
That's
is
why I asked. That's why your definition of a lot of money is a pretty big deal. So you're saying that a lot of money can be made in that time, with certain parent and certain practice from what he was just describing. Then like, I mean, I guess I need to sign up for the Signals group or something.
I know, right? Well, the signals group is good. Elvis's signals are good. Uncle P had he called that signal right before that gold drop. Man, that thing dropped 1,000 pips. It was like, oh my gosh, it was beautiful. Not all signals are great, and I definitely recommend no matter what signals you take from this group or any other group, you need to have some rules taped on your desk that say, hey, so and so, I trust him, I like him, sent out a signal, but I'm never going to take somebody else's signal with my money and my livelihood if I don't see it. So I need to see A, B, C, D, or I don't take the trade. So signals, ultimately, you still have to be, you have to be responsible for you. So, but not just other signals in that group. I think there's a couple of other indicators that Pat has. And also, there's a couple indicators that my little group is creating. Scott is creating, and there's access to some beta testing trade managers. For the person who just asked about a good trade manager, I would recommend you get into the advanced membership group because he is beta testing this manager that is second to none. So I'm not going to fib when I say this thing has been a process, man. It has
Now,
been.
what is that? That's membership group, because I know there's a Signal group, but I mean,
That's-
that's what I meant. Like, I wasn't necessarily speaking on the Signals group. I just, the
It's the
advanced
same.
group. What is that?
It's the same thing. So the advanced membership group also comes with signals. It comes with a couple of classes with me per week. And then we have a couple of indicators that are custom built in there as well. And some of them are awesome. Like they're very well thought out by somebody who is just like a tech genius. Like he is like a computer in human form. So like it has been a blessing to talk to him and to learn about myself through him. But he has helped create a couple of indicators, and he's also the one who's creating a trade manager that is, when I say second to none, I mean I've been in the industry for a little while now, and I can tell you of all the trade managers I've had access to that I've bought and paid for, that I have spent my time and money on, none of them do even a fraction of what this trade manager does. So it will manage your trade based off of your trading style. So like it will get you in and out based off of structure, based off of Ichimoku, based off of MACDs, based off of ATR, pip targets, and all that other stuff. It'll get you, it'll close a portion of your trade. You can test it. So like, let's say you have a theory that says, hey, if this happens, this, and this, there's this little visualize feature on there that will show you if your theory is correct in real time. Like it's quite impressive. It's totally a lot to learn. I'm not going to fib it. It's a beast. It's a lot to learn, but it is life changing. So that is by far the coolest thing ever. And we're beta testing it right now in the group before it goes to market. So
Professor
anyways,
Scott.
Wow. Okay. You so.
yeah, it's awesome. So that is what the advanced membership group does. It also comes with signals from Uncle P and Elvis as well, both amazing traders, and then a couple of other indicators. So when I get back to the chart, and then we'll cut it short after that, I will tell you the ATR ADR is simply the average daily range or the average trading range. So the average trading range applies to whatever candle, whatever time frame you have on your chart. So the ATR on a 4-hour chart is how many pips the candle moves, per candle on average, whatever you have it set to. Traditionally it's 14, but how many pips every 4 hours, right? So you need to know what that is. The ADR, on the other hand, is the average daily range set to whatever you decide. So it can be set to the last 14 days, the last 4 weeks, the last 12 weeks, and so on. So it will tell you how much each pair is moving on average per day. And of course, you can measure it manually and do the math, but that's just a lot of time. There's a handful of websites that do it. Again, takes a lot of time. And then, of course, there's indicators that now has gotten a lot better. And then, like I was saying, the custom built indicators we have in that group, all of them, well, most of them give ATR data, because trading and not knowing what your goal is kind of like going to jump in your car and not knowing where you're going. Like it's just a really silly idea. So if your goal is 30 pips, but you're trading, the slowest moving pair, you're fishing in the dark. Like you're literally spinning your wheels for no reason. Whereas if you knew what you were trading and you knew, hey, this slow moving pair is a great setup, but I also know to go for more than 10 or 15 pips is a foolish decision. You can make wiser decisions when you have all the data. So that's what the ATR is. And then your last question of what's possible in terms of compounding. This is an example of trading NAS. Keep in mind that says 30 pips, but as I've been so lovingly schooled, it's technically 300. But for the sake of this conversation, we're going to keep it at the 0. So technically this is 300 pips, but we know it's done at a micro lot. So it's a whole numbers thing. I don't want to spend another 30 minutes discussing it, although we've done that at least a dozen times. So I'm sure there's plenty of those on recordings. 30 pips happens in minutes on most indexes, potentially. And when I say in minutes, I do mean minutes. Now your accuracy does need to be on point. This is just a simulated kind of thing, testing in class. So these are plug and play.
Is it possible? Can't see it. Never mind. I'm sorry.
You can't see this?
No, I didn't mean to interrupt. I'm sorry. I can see it now. I'm sorry.
Oh, okay. I was like, I think you can, but it's okay. So back to what I was saying, these are just plugged in numbers. We do have a couple people who have completed the worksheet, who have achieved some big things, smaller things, bigger things than this number based off of this many trades. So having said that, just to kind of break through this, we have many, many versions of this kind of a spreadsheet, all of them different reasons, purposes, and pairs and percentages of growth. This one is not complex. It's not proprietary in any way. All it really is using a 0.01 for every $200. And that was kind of my recommendation for anybody who has 500 to 1 or greater leverage. So I'm going to say that again. This mathematical equation is simply a 0.01 lot size for every $200, weighted to the safer side versus the riskier side. So you'll notice that sometimes it's slightly less than it should be. It's because we weighted it to the safe side versus weighted it to the risky side. So 0.01 every $200 based off of however many pips you decide to put in here. This is based off of indexes specifically. It's not going to work the same on a Forex pair or a crypto or a stock, just so you know. And what this is showing you, hold on, there's somebody with background noise. Let me mute you guys. Okay, no, not you. There we go. But what this is showing you is pretty simple. So if you win, lose, or draw, this is what's possible. Now, obviously, we can add a whole bunch more losses in. We can add a whole bunch more wins in. And I don't recall exactly what this loss ratio is, but we count them 1, 2, 3, 4, 5. That's only 5. So let's go ahead and add some more losses in. 6, let's add a big loss in. Okay, 7, another one. So based off of X amount of losses, right? And again, even with some big ones and then some smaller wins, because that's very practical. So this is not counting all your, hey, I baby protected it and then I got a break even trade. Break even meaning you closed anywhere near, where you entered. So if you're up or down 2 or 3 pips, that doesn't even count as one of these trades, at least not the way I'm doing this math, because you can have a list of 100, but like that's just a waste of paper and space and time. So this is counting for trades that actually close with any amount of value. So value to the upside or value to the downside, same difference, same concept. What's possible? I mean, amazing things are possible. This is starting with $1,000. So this current accuracy is 1, 2, let me count it, 3. I did count it, then I forgot. 4, 5, 6, 7. I really should plug that in. 8. So 8 out of 45. Okay, to give you guys an idea. And yes, I'm getting my calculator because I'm recording and math in public is embarrassing. So to have to be wrong is what, 80%? So that's 83%, right? Is that what that is? No. Does anybody know what that is? 8 divided by 45.
Yeah, it's 83%, 70% losing, so it's 83% winners.
So yeah, 83% winners. Thank you for whoever wanted to confirm that with me. So that's with an 83%. Now, granted, there's some really small ones in here, but this, okay, how many trades can you take that in? That's 45 trades to give you an idea. This is what's possible. Now that's 100%. Is that going to happen? No. Do I ever get 100%? Absolutely not. Not going to happen ever. Okay. Granted, this is a bit with a bigger account size going off of 30 pips, but that's $35,000. And how long does it take you to get 45 trades? Well, like I was just mentioning, I mean, depending on what your schedule is like, finding 3 or 4 trades before New York opens, if I get my butt out of bed some days, not every day do I want to get up that early, but it's very easy. I mean, to find 2, 3 trades before New York opens, 2, 3 trades after New York opens. On average, I can find 2 or 3 trades late afternoon New York. I try to get out of my house a little bit and maybe see the sunshine and find a trail or go to a beach or get coffee with a friend. But if I'm home, then I will obviously catch those moves that happen right before the stock market closes at 4:30. So anywhere between 2 and 3:30, you're usually going to get some decent moves on indexes, or you're going to get some counter trend kind of reversal pullbacks with the scalping strategy. You're going to get a handful of them every afternoon. And then again, you have another possibility, during 2 different times of London and even around 8 or 9 p.m. So right before Frankfurt opens, you have another possibility of 2 or 3 trades. Now, this is not every day. We can't control the market, but can you get 8 trades in a day? Absolutely. So how many trades is that going to be? That's 2 weeks. So what's possible is huge. What's probable? Okay, so what? It took you 2 weeks to make $30,000. And this is with the pretty failure mentality. So notice that these wins are small. The losses are big. You have one good one, but mostly small ones. Okay, in terms of the pips you won, to kind of give you an idea of what you can do. And you can do 10 times better than this pretty easily. You can do half of this. And there was a person in the group who did close to half of this. It took them, I don't know how long it took them. I didn't ask. So the half of this, to give you an idea. Now, how long? It depends on your diligence, the ability to follow rules, your ability to not freak out. I mean, that it comes down to a lot of things. But what is a lot of money? This is a lot of money. $500,000 is still a lot of money to me. So, but eventually $500,000 isn't going to be a lot of money to me anymore. And honestly, $250,000 isn't even that much money to me anymore. Because if you think about it, if you think about the abundance in the universe we live in, so if most of your blocks, there's 10 houses on the street, if not more, And if you think about it, each one of those is at least $250,000, and each one of those has at least $50,000 worth of stuff in there. So even if you just look outside your window in general, even if you live in an apartment, that building costs $1 million. Like there's so much. So no, I don't think $250,000 is a lot of money anymore. I think $500,000 still is, but I'm working on that. So does that answer your question?
Absolutely, because that's a lot of money anyway. You know, I think by anyone's standard, that's a lot of money.
Well, but think about it. Like if you think about it in the terms of the world as a whole, right? Like people think that, oh my gosh, what would I do with the six figures? It's life changing. Six figures isn't life changing. Six figures doesn't even pay off most mortgages. I mean, not a brand new mortgage unless you live like in Oregon or Utah or something. But yeah, Arkansas for sure. I mean, I think you can still get a cheap house in Arkansas, but for the most part.
Hey, my mom's from Arkansas now, damn it. Hey, Jenny.
I also do real estate, so I can find a cheap house. So,
Where do you do real estate at?
in Illinois.
Illinois is okay.
Yeah.
Well, if I ever want to buy property, I'm coming to you. Deal?
Absolutely. I mean, you can reach out to me. I can send it to you now. I can tell you how to reach it.
I want to buy a lot of properties. That's my goal. So I'm going to start south. I already started west. I'm going to start south, and I'm going to work my way up north, and that's what I'm going to do. I'm going to just keep buying, and that's slowly but surely. That's my goal. So
Well, that's Isaiah.martin@kw.com. Free promo. Thank you.
Hey, y'all, before y'all go, there's a great quote from the movie Wall Street. Gordon Gekko says when he sold his first building for $800,000, he thought there was all the money in the world. Now it's all in a day's pay.
right. I could only hear a portion of that, Cleo, but I definitely got you. That there's a good quote in the movie Wall Street. What was the quote?
Well, the quote was when he sold his first property, his first building, he made $800,000. And at the time, he thought there was all the money in the world. Now it's all in a day's pay.
That's just it. That's the entire thing. That is a good quote. That is awesome. Hey, Tammy, listen up, lady. If I come to Tennessee, I will buy through you. Okay. There's some pretty rivers there, but I don't know how I feel about that. So we'll see. Like I like some other places around there, but it's a good place to visit though.
Jenny, good evening.
Good evening. How are you?
I'm excellent, Jenny. How are you?
Fantastic. How can I help you?
Okay, it's a question for you.
Okay.
If we are scalping in 5 and 15 minutes, what higher frames do we need confirmation from? Or scalp in 5 minutes, do we need a higher confirmation from?
I like to be in confluence with a 15-minute time frame. So if you really want to give yourself gray hair and a heart attack, by all means, play with the 1 minute. You can get in and out pretty quick, be one and done kind of. You have the freedom of time. However, you also have the burden of pressure. It's a lot of false moves. So like in terms of overall peace and longevity, like use the 5 minute in confluence with the 15 minute. You're going to have so many opportunities, like particularly if you know some of the strategies that give you re-entries, you're going to have more than you can bite off in a day, like honest to God. So you'll have plenty.
We don't need any confirmation from 1 hour or 4 hours.
Well, if you think about it this way, so look at the ADR, ATR on NAS, for example. If it's moving 2,000 pips in a day, you're looking for 50 or 500 of those. You're looking for, no, I guess you are looking for. So if it moves 24,000 pips in a day, and you're only looking for 500 of those, we don't care what it's doing all day long. Now, in my morning classes, I always look at structure. So the first thing I do, which we did not go over tonight because people did not speak up, but the first thing I always do is go over structure because it's just a good way to be. I want to know where I'm going. And it doesn't mean I'm always going to get there, but I want to have an idea. Like I'm okay with being jello, right? Saying, here's my target. If I don't hit it, I'm okay. And I've always kind of just been blessed with that. So my target is often the ADR low or the ADR high. That's my target in terms of trading. My target is often structure based or my stop loss is structure based. And I'm okay with being, fluid about it. I'm definitely okay with that. But having to know what to do, when you see that is important. So I don't care it per se, if the 1 hour and the 4 hour and the daily is going up when I'm looking for a quick sell, because I'm taking that sell intentionally against the trend. But I do care where the current structure would be on the 1 hour, 4 hour, or daily, based off of the support lines, trends, and resistance, right? That's what I'm looking for when I look at the higher time frames. I don't care what indicators tell me on the 4 hour. I don't care if any in my indicators or simplicity or the RSI. I don't care what any of the indicators tell me on various time frames. What I do care about is where price stopped on the 4 hour. Where is the trend line sitting on the daily? Because like for example with NAS today, we just NAS and US 30, I think we sat on that trend line for a hot minute and then we dropped hard. Like it was we had an idea it was coming. That was my analysis, and not to toot my own horn, but I was like, this is what we're waiting on. And boy, did we wait. We had to wait a long time because it pulled back again and again and again. But did we get it? Oh my gosh, yeah. That was gorgeous, beautiful, amazing, potentially life-changing amount of money for anybody who had more than a 0.05 on there. I mean, the three pairs that dropped so much, I mean, I don't even know. I think it was like 10,000 pips between the three of them in minutes. So
That is in mass 100.
I'm sorry?
Mass 100.
That's on indexes. So that's like US 30, Dow Jones, right? NAS 100, I forget how to say that. German 30. Those were the three that I was looking at. And I was already in GBP USD for the sell. So
Okay. I wanted to actually pick up only two indexes and then one pair. I don't want to look into all of them because to keep track of this will be too much. I don't want to get gray hairs very soon now. What would be a good currency pair, just one pair to look at it on the London to New York session?
GBP USD. Anything with GBP in it would be pretty good. I would vote CAD. GBP NZD is one of my favorites. From London to US. I mean, any US dollar pair is going to have N reaction or L reaction prior to New York Open. It may be big or small, but it's going to have a reaction for sure.
Okay.
So
if we had to use the simplicity alone for scalping, can we take a 5 minutes arrow with the 15 minutes arrow as
yes,
confirmation?
yes.
Okay. First is the 5 minutes and then the 15. Same how like we do 4:15 or 4:30 strategy, same thing. Confirmation on the 15 and then dropping to 5 minutes.
Yes. Were you on the class this morning? Are you in the advanced membership group?
I am in the group, but I didn't come to the class this morning. I didn't come this morning.
Okay, so definitely go watch that recording because this morning what we did was we went over. Okay, so great, woohoo! Now what? You're taking alert-based trades. That's awesome. But now what are you doing? So don't just take every alert all willy-nilly. And we have a ton of alerts at this point. We have plenty to choose from. So make sure that you go watch that and then look. I went over specifically, and I'm actually going to write it up into a template and then I'll put it in there. But just going over every reason to say, hey, once we get the alert, or if you're in front of your chart and the conditions are met, make sure this stuff is lined up prior to you taking it, and that's it. So it's definitely a good way to be.
Fantastic. Thank you, Jenny. I will look into that video what you did this morning.
Absolutely. Thank you.
Have a wonderful evening. Thank you.
Hello.
Hello.
I'm pretty new to the system. I would like to join in the scalping class, but at this point, I've been joining with Uncle P. I don't know the setting on they use. Well, I'll pretty much want to join in the class. I've been told I need to be invited, or I don't know the procedure.
So you wanted to
joining in your scalping class.
Okay, so that's step 5 on the website. So like once you're already a member with SuperEZ, just follow through to step 5, and then it'll say join the advanced membership, and then you'll have the links for that.
Okay, so I'm gonna have to check it out. So is it like a separate payment or to join it, or?
I'm sorry, can you re-ask your question?
Is it like a separate payment to join in the membership, or is this a part of the first initial signing up fee?
No, there's a separate fee for being part of the membership. So all that stuff is on the website too.
Okay, I'll go and look at it.
There's a lot of hours in classes and people giving out not only signals and their time and everything else. So that's why. And it's meant to be for people who don't know how to trade. It's meant to say, okay, let's try not to bombard and overwhelm people who aren't comfortable looking at a billion things. But then let's also take the people who are comfortable with entertaining more than one thought process, evolving with different strategies and different topics and different people and different groups. Like the whole concept is to take all of that and to really just hold nothing back. So like we can talk about the other sides of trading. We can talk about the other strategies. We can talk about, Fibonacci's. We can talk about the Ichimoku cloud. We can talk about things that don't have to be in conflict with the simplicity, super easy, just follow the arrows. Because some people, they just want that. They don't want anything else, and anything else really confuses them and maybe even limits them. But we want to be able to still provide an environment where people can grow, evolve, contribute, talk, advance. And that's kind of the purpose of that other advanced membership group, is just to overall be somewhere where there's a little bit more. There's more access and more knowledge, and that's what it comes down to. And signals for the people who are looking to learn to grow and trade. So
Initially, when I joined, I also joined for a signal group. So this advanced group, is it quite different from the signal group?
it's the same thing. It's all the same thing. So the advanced membership group comes with the signals, tools, and me and coaching and scalping.
Okay, because I initially joined the group, and when I think my 1 month joining just expired, so I might have to go back and rejoin again. Well, thank you.
You are welcome. All right, guys. Well, that's about it. Unless there's somebody else who has a really pressing question. There's a few people unmuted that I can see. We went over a little bit. That's cute.
Hello, Miss Jenny.
Hi, how are you?
Good, how are you? Just
Wonderful.
a quick question, just your thought. Okay, like let's say you have maybe a couple of $100 in your account, and then gold was falling this morning, but then it just had a rate. How do we say it came back?
Yes.
Right, and it's so fast moving and a lot of money. So what's your take? Even with the 0.01 lot size, sometimes it's kind of like wiping all your whatever is in your account.
So wait a minute. You were trying to sell when it pulled back and you lost the trade?
That's my thing, because I had one time it did that to me, and I had a margin call. They had to stop it, even with the 0.01 lot size.
Okay, well, you can't take trades, and this is where that whole Wanda conversation comes into play. You can't take a trade. So if your stop loss is going to be too big for your account to hold it, you can't afford the trade. So it's no different than if I went to the mall or I went somewhere and I was like, hey, I really, really desperately want this Louis Vuitton bag, but my bank account does not have $3,000 in it or $5,000 or whatever size one has. I mean, technically, can I walk up to the cash register, give him my debit card, give him the purse and say, yes, baby, I want this? Yeah, but I'm definitely not getting out of the store if there's no money in my account. It's the same concept. So you can take a trade, but the odds of you getting out of that trade alive, okay, or with your purse intact is very, 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 very unlikely. So this is gold. Let's see.
So the good thing is just stay away till you grow your account a little bit. Well, that's management, right?
Yeah, fast movers, you have to stay away until you have more room in your account, or you need to find more leverage. But where did you sell? What candle did you get in to sell?
Oh, not today. That was about a month ago.
Okay, gotcha. I was gonna say,
not today.
This one was, I mean, again, just beautiful. I'm talking beautiful.
Yeah, even today it retraced a little bit on top, but it wasn't as bad.
So here's the deal. If you take this trade here, let me go to Control Y, and then I am going to hop off. So ready? Let's say we took this signal. This is the hour time frame. So I'm just going to go with what's on this chart. We're not going to talk about any hypotheticals or anything else. No other confluence or nothing. So let's say we get this alert. Keep in mind it's a candle late. So we get this. We don't get that until the candle closes. So I'm going to zoom in now. I'm going to hit the magnifying glass. Okay, so let's say we get a signal. It comes to our phone. This is a good time to trade. I mean, I'm awake. This is London or New York, so I'm definitely awake for this. right? So I decide to take it. Price closes below where I got the signal, and it closes here. So I'm sorry. That would be my magic mouse. Thank you, Apple. So I have to know that I can handle 600, well, what is that? 560 pips in drawdown.
Yep.
So if you can't handle 560 pips in drawdown, you can't afford this trade.
Right.
No matter what. And that's how you have to look at it. So your stop loss, I mean, of course, we all want a 20 pips. We all want a lot of things, but where the stop loss needs to go is above the previous structure. And if you can't afford that, then you shouldn't trade that. Now you can get a little bit more savvy and say, hey, I'm going to put it here above where this candle closed, or here above the support and resistance. It's not nearly as safe. And in this case, it would have worked out. But in other cases, like we saw with Odd CAD right in front of our face, it came back and broke that level of support and resistance pretty easily. So you do have options, but ultimately your first question when you get a signal, whether it's from the group or a free signal, or if it's from so-and-so, it doesn't matter if it's from an indicator, is can I afford this trade? And if you can't afford this trade, you have to wait till the next one comes. And most of these fast movers, the answer is going to be no. Because take anything. Let's go to GBP real quick and then we'll jump off. Honestly, seriously. Maybe.
Thank you.
GBP USD, same story. So if I take this trade, so I get a signal on it, 1 hour time frame. I'm going to draw a vertical line at the time I got the signal. Okay. I'm going to zoom in a little bit. Now remember, we have to wait for that candle to close, and we need the next one to make a lower low. So now that I've got this signal and it looks like something I want to do, I need to know that I can afford 120 pips in drawdown. So if I can't afford 120 pips in drawdown, so on a standard, that's $1,200, right? If my account can't afford that, then I should not take that trade, or I should take it in a smaller lot size or what have you. And same concept, I could, in theory, put my stop loss slightly closer above this level of structure or above the most recent kind of highs and play it slightly safer. But what could also happen, like happened 3 other times, is it could break down, pull back, break down, pull back. And I think actually this one, it didn't come all the way back, which is nice, but.
And pull back. Okay. Thank you.
You are welcome. You are welcome. All right, guys. Well, that's enough for tonight. So I am going to go ahead and cut it off. I try to stick these to about an hour. So Frankie, I see your message, and please, please, please know that you are welcome to interrupt anytime, all the time, because that's just kind of how we are. I feel like it's more, I definitely feel like it's more personal when we can all just talk and hang out. So, and I adore working with you and talking to you. So next Tuesday night, remind me, hopefully before Tuesday, say, hey, Jenny, can we please do structure and trend lines tonight in class? And you can be my guinea pig. I'll let you share your screen and we'll have you do it through and through, because being able to find your own trend lines and structure is probably the only skill that you actually cannot live without. I mean, every other skill for the most part, you can mostly live without some good rules, but that one you can't live without. So deal? Okay. You're welcome, everyone in the chat. And Maria, what days of the scalping classes are? Tuesdays and Thursdays. Definitely Tuesdays and Thursdays. As time goes on, I might do Wednesdays and Thursdays to give Pat more, depending on what Pat ends up doing. Or I might kind of switch it around a little bit. Like if I was traveling one weekend, then I'll switch it up a little bit to where I have more time to be out of town, and then I can still do my classes in the morning and kind of keep my commitment, because I really try to do that. So, but all right, everyone, thank you so much for coming and hanging out. I hope that some of this information helped you. If you have any other comments, questions, or concerns, by all means, please ask them in class first and foremost. If not, yes, you can message, and I will do my best to get to you and help you where I can. So all the groups and links are in the Telegram chats and on YouTube. I hope you guys have a great night. Take care and God bless.
Thank you.
Thank you,
Jenny. Thanks, Jenny.
Thank you, Jenny.